All right, man. I was just practicing. All right, nice to hear you guys. Sorry. Yeah, I was talking to myself for 3 minutes. Sorry. All right, listen, what I said was I wanted to mention that tragedy at Sandy Hook Elementary, and I'm sorry for anybody that's affected by that. I know Alan lives in that area, and I can't imagine sending your kid off to school and something like that happening. It's just unimaginable to me. I'll keep you in my thoughts and my prayers over the holiday weekend if you're affected by that tragedy. But in a way, we're all affected by that because it happened in a mall I think on Monday or Tuesday, and it happened again today. And you know, we're all blessed and we're lucky, and we take for granted, you know, that it's the holiday season and we have money to go out shopping and buy junk that we really don't need and put these ridiculous trees up and drape the house in lights, and we're fortunate like that. But some people get depressed during this time and they act out and do these things to innocent people, and it's horrible. I saw that Kim undid her mic, so I want to know if she wanted to say something for the final night of class. Kim, if you're available, I would like to turn it over to you for a minute and just say what you got to say. So if you're there, go ahead. I'll be quiet for a second. I don't believe for a second you're at a loss for words.
No, you know I'm never at a loss for words, but I was like, oh my gosh, I've got to get my headset on. Sorry. Hey, I just want to say this has just been an amazing class and session, and you know, I'm with you. I've kind of been so down today, just thinking, you know, what is our world coming to, especially when so many young children you know, won't be able to be with their families, won't have them. So it's been a very emotional day, but I do want to thank you. I think this has just been a really great session, and I can see by all the comments how many of you guys are getting those aha moments, and you know, it's just one of those things that we can never give up. So, you know, if you've been struggling or whatever, you know, keep at it. You know, I think the message is really clear here, and I want to thank you, Steve, because I think the message is very concise and being delivered amazing.
Well, thank you. I appreciate that.
So that's all I have to say about that.
All right, guys.
Anyway, I want to wish everyone a happy holidays in case I don't get to speak, you know, at the end, but I want to wish everyone a happy holiday too as well.
Okay, thank you. All right, guys. Let's get to it. If you don't know what's going on, just Google it. Some of you are asking me, you're out of touch. I understand, but I'm not going to rehash the story. It's very sad. Just Google it. You'll find it anywhere. All right. Questions for anything about we've covered in the first 3 days? Listen, I want you to understand something, that tonight it's over, but it's not over. It is just the beginning. Anything that's not covered in class or anything you're struggling with will be taught on the other side in 2013. We're going to have a town hall meeting open to everyone on January 2nd, I believe. I think it's Tuesday night at 7 o'clock. Everyone will get a link for that, and we're going to discuss the DMR, the strategies that need to be implemented in there, and how we can make that a better venue and active with everybody. So we're going to put some surveys out, ask some questions, and the goal is to make 2013 the year that everybody turns the corner. So I'm going to see if I can do it. Yeah, it's going to be a breakout session. I will post it online, and you will get an email with the link. All right, we're going to have a town hall meeting on January 2nd, 7 o'clock. Everyone is invited, and we're going to just spitball ideas and things and see what direction we need to go in there. I want to hear from everyone that's serious about making 2013 happen. And what I want to do is anything that's not covered in class that you're still struggling with, I'm going to break down into individual modules, and we will go through the entire class again through the DMR process as a boot camp. So what we'll do is, like, if candle patterns will be one day, we'll cover indicators, we'll cover moving averages, we'll cover the patterns, pivot points, all the stuff that you need to rehear or listen to again, we'll recover it. Thanks, Rob. Appreciate that. Joe, thank you. Everything will be recorded. All right. Okay, so let's get to the questions. Anything that people need to ask me about? Thanks, Rusty. Appreciate it. I can't believe we don't have any questions. We have a light group tonight. I think people are opted out for Friday shopping and and a beer. I'm with you. Carr, thanks for the cheesecake, brother. Carr shipped me a cheesecake from New York. I just got it. Tomorrow night I'll break that out after dinner and share it with everybody. You guys come by, all of you, for a slice. I'll cut really thin. I was talking to all of y'all. All right, John, I'll get Casey to get that out for you. All right, I don't know. I get up around 3 or 4 in the afternoon, so we'll do dinner around 7, 7:30, or I guess 8. And I'll sharpen the knife. I'll cut razor thin pieces. Everybody can get a taste. All right. All right, I can't believe that's all the questions we got. All right, a little more about resets. That's going to be covered on the other side. Absolutely, Rusty. Okay, nothing else? They're on the same schedule, Pablo. Okay, all right, I'm going to get to it. All right, so listen, if you were wondering where the how to get to the forum, some people have asked me to look at that. You go to the website, and you go to forum right there, and you push on that button, and you sign in. If you haven't done that, and the recordings are in there under Steve's latest class. That's why that's up, okay? Just go to the website, click on the right-hand corner forum button, and you'll be in. You should have a username and password, and if you don't, no problem, I'll get it for you. All right? Just email me and copy Casey, or actually email Casey and copy me on it, and I'll make sure you have it. All right, right off the bat, we were talking yesterday about the candle patterns, and I went through it kind of quickly because I knew I was going to do this module today. All right, so you saw it last night, and I want you to go look at pound dollar from yesterday, and I want you to see that outside structure to the low, pin right to the 4-hour. Okay, and then see the stuff that I'm talking about, how the dealers do it over and over and over again. Anybody take pound yen short off the nation high, correct back into the range, end of the day, easy 50. Dropped about 75 pips. All right, we'll talk about these things. All right, so we're going to have a follow-up to the thing we ended on last night. It's just a trick, Joe. All right, we talked about these structures last night that you need to be looking for. We're going to go through these quickly because we went through them already, and some of the pictures are the same, so I'll avoid some of the pictures, but I just want to I want you to see the structures, okay? So trap candle patterns and dealer structures is what we're going to talk about. Okay, market maker trap move, half a Batman, all right? Basically what a half a Batman is when the dealer makes an outside structure to the high or low. I know you're going to complain about that color. Hold on, just kidding. You guys ain't going to stand for that. We'll try this. All right, the dealer makes an outside structure to the high or low. He stays into consolidation and then rolls out of there and corrects against that move. All right? There is no second leg M or W. Okay, inverted half a Batman. So he gets up in there now. He doesn't want to repenetrate this area. This area is blacked out. Okay, so now that the area is blacked out, the dealer won't reapproach this area, and he will keep price away from that area and roll it over and get out of there. That's where half a Batman to the high, half a Batman to the low comes in, all right? Here is the definition of it. The dealer has spiked the high or low as a means to set it for the session. The dealer is now trading off of that level, an outside structure. He will not repeat the level again, or he will allow some type of profit booking by the traders. Price appears to roll off the level, and now the trend, the true trend, is underway, away from the top of the ear. Always, okay? The dealer's trading away from the ear, away from peak. All right, inverted. And I showed you the pictures yesterday. Okay, M formation. By the way, that's a spider web, which is kind of cool because the M formation is a trap. So it's a neat way to look at it. All right. What's the M doing by definition? An aggressive move by the dealer to set the high of the day or the high of the session, the HOD or the HOS, okay? The first leg rise induces traders to take long positions. The center, okay, the center of the M, first leg rise, pulls back, the center of the M. I know that's called something, and we always have this debate every class. My English majors, let me know what that is. The center triggers their stops and gets traders to stop and reverse short. It's the nadir or the apex. The nadir is to the downside, the apex is to the upside, right? Okay. I thought that was a pin in a car. Is that right, Gloria? I know you know. All right, look. The first leg induces traders to take long positions here. The center triggers their stops and gets traders to take short positions. The second leg their stops. Second leg rise can be slightly above the first leg, minutes, up to an hour. Could be 4 bars and come back below. The second leg rise will only go above the first if there are orders built up there. This move triggers the stops of the traders that have taken short positions off of the first leg and grabs any breakout traders that have pendings waiting there. That's what the M does. Okay? You know what they look like. All right, here's a typical chart. This is EJ from April, and damn if it ain't doing the same thing over and over again. All right, the W. Okay, the W is exactly the opposite of the M formation, an aggressive move by the dealer to set the low of the day or the low of the session. The first leg correction induces traders to take short positions. The center triggers their stops and get traders to stop and reverse long. The second leg correction triggers those stops. The second leg correction can be slightly below the first, but must come back above 30 to 45 minutes up to an hour. The second leg correction will only go below the first leg if there are orders down there for the grabbing, for the taking. This move triggers the stops of the traders that have taken long positions off of the first leg by coming back and getting those guys out, okay? Correction means always a move off of the trend, okay? So if this is, let's say if this is the rise, they correct off of that. If this is the rise, they correct off of that, okay? It's always the opposite of the stop hunt. Correction, all right? Sorry about my terms if I'm messing with you guys. I don't know if that's in the vocabulary. But look, here's a W formation, second leg railroad tracks, right down to the blue tracer. All right, the star formations we talked about last night, but evening star, morning star, to put it simple, is this. It's an extra 15 minutes for the market maker to take your money. No other definition required. They hang around 15 more minutes. They hang around 15 more minutes. When normally railroad tracks would suffice, the dealer's hanging there to grab a few bucks. All right, if I'm going too fast, let me know. Okay, outside structure. There is no, we don't have a pavilion move. I'm working on one. I'm trying to figure it out. All right. The vector portion of a half a Batman. It's used to set the high of the day or low of the day as a single leg only. It's used to form the HOW or LOW, high of the week, low of the week. Usually a big aggressive outside structure will come in, let's say, at the London stop hunt time. All right, so on the scheme of things, you have your intraday move. Here's your day tracer. Look at GBP USD from yesterday. You have a big spike to the low out of nowhere. And in this example, it happens to go down to the 4-hour mark, spike it and come right back, and the dealer stays off the area, right? On the bigger scheme of things, over the course of the week, this outside structure is tied into the whole cycle that happens to be coordinated with the London Open and pull back and then pulls away. Okay, so maybe this is Monday, Tuesday, Wednesday. The dealer outside structures at the LOW, low of the week, which happens to coordinate with the low of the day in London, and then into consolidation and rise off of those numbers, okay? Remember that everything that he does on a small level is part of the bigger picture, and if you step back sometimes, if you can't see it, switch to the 1-hour chart, switch to the 4-hour chart. You know that thing where they say, oh, you can read a trend, step back with childlike eyes and all that? Well, that's crap for the technicals. But if you step back and look at a bigger time frame and look for the big aggressive spike moves, the moves outside structures, railroad tracks to the high, M&W formations, you will see the dealer trap moves on the higher time frames. Maybe with the childlike vigor, I don't know. Hey, I forgot to mention, I wanted to say hey to Captain Ray. That was a great email, brother. My wife said she knows you're going to retire from FedEx and our packages are going to be late now. Ray's doing really well, and I'm happy for him. I wanted to mention it. There he is. I love that email, brother. Thanks for sending it. That stuff makes my day, man. All right, here's the outside structure. Aggressive move down. The dealer stays off of there. This is the first part of the half of Batman. Okay? Again, a more mild one. Understand that a combination of candles can form the structure, because if I jumped up to a 1 hour candle, I would see 1, 2, 3, 4, right? And the outside structure would be these 4 bars on the 1 hour chart all together, dropping down and then sideways. So understand that. Count multiple candles together to see the outside structure. If it's not clean in one move like this, where the dealer does it in one bite and comes right back, he might do it in multiple bites that work to the outside and then go sideways, okay? It's understanding these little nuances that are going to make you successful. All right? A big aggressive vector to the high. He works it for 30 more minutes, 45 minutes in total, and trades off that number. Outside structure to the high. All right, hopefully you guys are seeing this stuff, all right? This is a classic outside structure. I want you to take a screenshot of this, if you will, with Jing or whatever you're using. This pattern appears on a regular basis in the Forex market. This just happens to be GBP CHF, but I called it a classic outside structure because it's a classic outside structure. You'll see it again. Sorry, I'm shaking my ice around, and I'm out of drink. That's bad. Heidi's slipping. I'm only, what are we in, 15, 20 minutes in, I'm out of drink. I'm doing bad today. All right, so listen, take a picture of this, the whole flashcard that I made up for you guys. All right, because you'll see it again, I promise. It's vector to the high. Notice how the trend is reaching up right in here, look. Okay, let's analyze everything that's going on and put this into. Moving averages are fanned out, probably in level 3, right? The last leg of the last leg has a nice reach to the high. We could say on the little pullback right here, he pushed it maybe 1, 2, and then tapped it with the wick to the high 3 and pulls back. You now have the trap move to the high side right here. The dealer comes near it several more times. And then right outside the box, railroad tracks, and then look, news release, hits the stops in one candle, both directions. What did he do with this candle? He cleared out the traders that are thinking up, and he grabbed anybody that was short in here, right, by going back against them. One candle, he cleared the board, right? And then what happens? Just straight drop, hit the stops, drop, game over. This structure right here, you can see this coming a mile away, can't you? When the dealer vectors to the high like this at the end of a run, and then he fails to break it, this is a perfect scenario of a setup. Look. See it? Okay, I'm going to clean it off. I implore you to take a picture of this. All right? The shift candle is kind of weird because he hit the stops right here, and you could say maybe he shifted below the Asian numbers right in here. There's not a very good clean shift candle in here. But the candle that gets things underway is when he breaks below. Then he comes back, hits it, and corrects. But what you're looking at is this. How the dealer refuses to go back above a brick wall, remember? There must be some monster order sitting here that he doesn't want nothing to do with. Stop loss goes, depending on where you get in, stop loss can go right here or stop loss goes right there. I'm going to talk about stops today. All right? Stop loss always goes outside the reach of the dealer. If you got in, the best entry for this, and it's easy to say now because the chart already set up, but is the second leg of the M formation with the stop loss right here. That's the best setup, but we don't know what's going to happen here if he's going to come back for the stops. Okay? All right. So let's go over what's going on here. Take a picture of this. I'll erase it and leave it clean for a second. The high is established. Railroad tracks comes near the HOW high of the week but does not break it. The spread is widened. We know he opens the spread at the test candles here and here. Dealer comes back, right? High retest candles. The averages start to flatten out, right? See how they were open? Now they're coming back together, right? Okay, see that? Mustard makes an M. Take the candles off the chart in your mind and look at the mustard. It's an M formation. Okay? Stops it in one bar right here. He works it in one bar. Picture if that was spread out over multiple bars, it might look like this. Right? If this work was spread out over several bars, it might look like that. Maybe on a 5-minute chart it will look like that, but I don't want you to look at that chart. All right? An easy 50. Easy 50 on there. You just fade this structure. You're looking for this whole structure. This is what you're looking for. You're going to see this. Hold it in the mirror and it's inverted to the upside move. You're going to see this a lot. The dealer will apply the brakes at a certain price point and act like he can't get past it. But the mentality for retail traders is the continuation. The continuation. So people buy the dips in an uptrend. So they go, oh, the 50 is offering support. We will go long here and project out here. And it's absolutely not going to happen. Go back and look. You'll see triple tops. The dealer hits it 3-4 times. He normally doesn't do that. But he's doing you a back for you. All right. Next one. Outside structure on intraday. This was a multi-day, by the way. Sorry. Multi-day outside structure. Intraday outside structure. What happened? The dealer ran it down. He vectored at the end. See the vector at the end? An aggressive move. He works it with some hammers. And then he does not. In a way, this is your tiny W formation. Dealer stays off the area. And then bam, gone. And then back to the high. Look at the pins. Look at, boom, you're out in 45 minutes. What is that, like pizza delivery? 45 minutes or it's free. You're in and out, man. You grab that trade in the right spot, and you're in and out. All right? If you grabbed at these hammers, it shifts into profit. You stay roughly in small profit, and then you vector right out of there. All right, what happened? People saying they can't hear me. Is it me? My voice is killing me, guys. I'm sorry. All right. Okay, Anthony, I think you're the only one, brother. It's you. It's not you, it's me. It's not me, it's you. All right. Sorry. All right, I'll try to be more forceful. It's very hard. All right, outside, multi-day outside structure to the low. I wanted to show you the opposite. It's the same behavior. Look, comes out of the Asian range, an aggressive move to the downside. Pins are unidirectional. Pins are unidirectional to the downside. Pins turn unidirectional to the downside. The dealers trap and pull, trap and pull. There's your W formation. He comes back one more time in the U.S. session. Right? He holds the level to the next day. And then what does he do? He shifts it off a little higher, grabs the breakout guys, the people that will short off the 200. And then what does he do? He comes back, makes the W formation in the shadow box off of the low structure. This would be your peak formation, and that's a quasi-safety trade. It's a straight rise because he doesn't trade below Asia, and I'll show you that. And that's an easy ride for you. But this is what you're looking for. I'm going to clean it off. I want you to take a picture of it. These are the kind of things that the dealer does over multiple days. To the low, to the high. Those are the things that he does. You need to see these whole structures. Stop looking at this little section of the market and cursing me out under your breath and go, I shorted that, Steve. You need to look at the bigger picture and understand that the money, when you see this, you go, money's trapped. He's got him. He's going to rise off of there. That's why you can predict these trades 12 to 24 hours out. Okay, if you saw this setting up mid-London, you know you got to London the next day. That's 24 hours to see this trade coming a mile away. How do you know? Trend is exhausted. Why? Averages are separated. Dealer trading below the 4-hour, below the 1-hour, below the intraday balance line, below the signal lines. He vectored. This is a dead giveaway right here, spike candle. There's absolutely no explanation for that candle to be aggressively straight down like that, especially if it's a non-news day or whatever. He may or may not hide behind news to make that happen. He pulls back, hit the stops. Notice how he double pins yesterday's low. See that? Goes right back to it, comes right back down, acts like he can't get above yesterday's number. See it? It's a joke. Acting like he can't get above yesterday's high. And the reality is he's going to tomorrow. So he goes into level 3 chop, level 3 behavior. Remember when I talked about the wedgies, right? Bring it in, 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 bring it in. See the wedgie? Now, I'm a dealer. I'm analyzing my book. I got top side volume long, downside volume short. I'm bringing it in, bringing it in, bringing it in. And, right, lower level shorts, higher level longs, higher move is tighter and tighter and tighter. I analyze, hit the stops, W formation. I rise off of that. And I guess that would be, wait, is that a head fake? The dealer got you. Garbage, right? Understand what's going on. The wedge is a way of dealer accumulating contracts, bringing them in tight, bringing them in tight, bringing them tight, get down to a very tight range. This says 25 pips, but here this is probably 10 to 12 pip range right here. It's half of the actual range. So the dealer is down. He's got this wound down to like 13, 14 pips, and he's analyzing it. He knows he tried the trap to the downside. He's looking at lower level shorts versus higher level longs, net contracts. What's his net contracts? Well, I don't know the answer at the time, but I could tell you that this behavior means to me, it means that he is trying to trap lower level shorts, and he will rise against those contracts. So if I know the dealer is going to rise against those contracts by this behavior, then I know that I'm a long. The probability is in my favor to take this setup long. If I know that he's doing this, if I can find it, there we go. I know that this structure tells me that he's working and bringing the volume in. I know that he's working the volume in to trap higher level long holders. So if I grab these structures on the chart, if I am aware of these structures and I'm looking for them, I know that he is trapping lower level shorts or higher level longs on the other one, and then I am in line with the dealer by looking for straight rise long or safety long in this example. And in the other example, I'm looking for straight drop short or safety type trade short when I see these structures. So if you're not aware of these structures and if you just had your aha moment, I really want you to take a picture of these and make. So there you go. Take a picture of that. I'll shut up for 2 seconds and take a drink. Okay. All right, so let's look at just a few more examples. Multi-day outside structure. Dealer, look at this, man. This is like, if there was a textbook and I was ever going to put one in, this would be in the book. Look at the 4-hour right here. Now, something that's pretty crazy is I took this, I don't know, 6 months ago, 8 months ago. I can't remember. I did it over the summer. Go look what pair this is. Now go look at pound dollar and tell me if this exact move isn't laying there right now. I actually took a picture of it for you guys because I was like, that's a flash card if I ever made one. I can see if I can find it. I don't see it. I'll get it on the break. But anyway, look. It might be on my laptop. Okay, look. This exact move is laying there right now. But this is the classic outside structure. The dealer trades off the level. Remember what happened? The chart is blocked. Okay, there's your vector candles out of nowhere, right to the 4-hour, sideways. The dealer comes with a mild stop hunt and rise. Take a picture of this structure. All right? Yes, very important point. Little to no net change in the 24-hour period. Very important. Okay, talk about the spikes. What's a spike? A spike is part of that vector move you've seen, but it's really inexplicable. It comes out of nowhere. Here's the definition for it. An aggressive change in price usually following a news announcement. The dealer hides behind the news to issue the spike, and then they blame it on news conditions that the market went crazy, right? You know that the news is crap. I've said it. It's BS. The dealers use the news to issue the spikes and clear the board, and that the talking heads will say, depending on which way the market went, oh, the traders reacted favorably to Euro news, or traders were afraid of the news today and they sold off. That has nothing to do with the direction on the news. Because if it was so simple to trade news, if you anticipate good news, price will rise, then why wouldn't you just buy every time they release positive news and sell when they didn't? It would be simple, right? That's not the case. The news is the catalyst or the trigger for them to hide behind to make these aggressive moves against you. So the spike is an aggressive change in price, usually following a news announcement. It's used to trigger the stops or shift the trading zone entirely. The direction is based solely upon dealer open volume, which is the net longs or the net short positions. It has nothing to do with the retail trader's trend. Sometimes it follows the trend. You got lucky. Sometimes it doesn't. Your job is to identify the vector, the spike, where it goes, and act accordingly. You can trade the news. I don't recommend it, and I'll tell you why. If you're trading a smaller account right now, you're going to see these vector candles, and you're going to see, man, there's a perfect M formation off the news release. I could short that. Yes, there's a perfect W formation off the news release, non-farm. I could go long that after the W holds, 930. Yes, of course. But if your account starts to get bigger, you're going to have problems getting filled. And you're going to get partial orders, or you're going to get slipped, and it's garbage. You don't need that in your life. If you can analyze the market every single day, 19 days a month, and know where it's going to go, why do you have to trade non-farm? And sure as shit, just as soon as I say that, Friday everybody will be trading. So I'm telling you that you don't need that stuff in your life, and as you build your account size, it's going to start to be more problematic for you. Okay? So what I'm telling you is that you might as well get in the habit now of making your money on the other 19 days where news is a non-issue. Okay? For those of you that don't know, non-farm payroll is the first Friday of every month, 8:30 a.m. New York time, and it's an aggressive, wild ride if you try to trade it, if you don't know what you're doing, and you don't need that crap in your life. You don't need the stress and the aggravation. I know a lot of, myself included, that have tried to conquer that day because it pisses you off. They can't run of time, energy, and money. You have to just agree to disagree. Just step aside on that day, okay? It's not necessary. You can predict the market with relative ease where they're going to go. Just stand aside. All right? I don't care if it's your day off and you're happy to be home, because if you traded in demo and have success, the minute you put live contracts on the line and as your account starts to get substantial, you're not going to get the same reaction that you got in demo. Very important to note that. All right. So we got the spikes. Here's what they look like. Out of nowhere, look. Okay? Bam. Dealer reaches up there for no reason, reverses off of that. Okay? How about this? Dealer spiked high above yesterday's high and then drops like a rock, makes the low of the day, and goes back. And this is a news release. So even with the news release, it's the same garbage. Same thing. Level 3 behavior chop. Okay? One big aggressive release right at news time. Bam. Then he makes the outside structure. Now, I was going to tell you is if the deal to the top side or downside and gives you the outside structure, and then you go into the session changeover and he's holding that structure, that's a tradable event after the news has calmed down, about an hour or so. So I know you're going to trade it, so I'm telling you how to safely trade it. Wait for the spike to release and then see what the dealer's offering. If he's offering you the outside structure, look for him to hit the stops and rise. He could hit the stops up higher too and rise. the dealer spikes to the high, exactly the opposite. Look for outside structure, or look for him to make a full M or W formation. 1 hour, 1 to 2 hours after the news has calmed down. The spike time is about 2 hours. The dealer will spike and hold the level for about 2 hours, okay, and uses the news as the trigger for that. All right, railroad tracks. We talked about them a little bit, but we'll go over them in a little more detail. All right, a railroad track is a 30-minute structure where the market maker triggers the stops, shifts the zone, sets the high or low of the day in one move. A good size for railroad tracks is about, on the milder pairs, about 15 to 20 pips. On the bigger pairs, when I say mild pairs, I mean the commodity crosses. All right, some of you know or don't know this, but the way the pairs are categorized, there's actually 4 majors and 2 commodity crosses. That's the way it's set up. So it's USD CAD and Australian USD are the commodity crosses, and then the 4 majors. People consider those like a group of 6 majors, but the way I was taught is the reality is that it's 4 majors and 2 commodity crosses. And why? Because they're pegged, one's pegged to oil, one's pegged to gold. All right. But you know what? It doesn't matter. Just trade the pattern. Call it a day. Okay, so this is what a nice set of railroad tracks looks like. I want you to notice how the light blue tracers in the background, the 4-hour line is right here. These are triggers, and just picture what he's doing here. That is that formation, but just broken down into 30 minutes. 15 in, 15 out. All right? Double railroad tracks. Your entries here. If you can't afford to stop, cut it. Cut the lot size down. All right? We saw this last night, railroad tracks top side. All right. We covered these already, understanding that what people see, what they do. These are some of my favorite things. All right, your only defense is to learn to identify these behaviors. Trade in line with the market makers, and don't be afraid to trade both ways if the signal is present, with the exception of level 1. Do not trade level 1 back towards the peak formation. Can you trade in level 1? Yes, but don't trade level 1 back towards the peak. Never trade back to the peak formation coming out of level 1 consolidation. I can't say it enough times. It's a sucker's trade. Just remember, when you're looking at level 1 and you're going the wrong way, remember the margin window, and remember what I told you about this. All right. Very important. Market makers create sentiment and act against it. They use the news and rumors to take your money. Think about what I'm saying, the validity of that statement. What I'm telling you is that they create a sentiment by validating orders following the news releases for a day or two to create a negative sentiment about the euro, a negative sentiment about the eurozone in particular, negative rumors about the fiscal cliff and the price is going to fall off a cliff and we're all going to die, gloom and doom. The market makers will trade in line with that news, and when they have enough contracts accumulated, they will act against that sentiment and punish. Okay? Yes, Harvey, they do. The question was, do railroad tracks need to be full-bodied candles? Yes, otherwise they're not railroad tracks. Good question. All right, so listen. The news comes out, it's a certain way, the dealer acts in line with that news, everybody piles on, and then he's like, ha-ha, gotcha, and he goes the other way. And that's pretty much what he's doing. Maybe he doesn't actually say the aha, I gotcha, but he's thinking it, I know he is. All right, look. Let's go over some little rules about Forex, and we're winding down here. The fast move is false. The spikes, the vectors, those quick moves are done on low volume. Okay? Never chase rising or falling currency. It's a trap. Don't feel like you're missing out. You're missing out. Because what they're doing is market makers will drop to buy. If price drops aggressively, he's buying. If price rises aggressively, he pumps to dump. Think about what he's doing. He's doing the opposite of what the retail traders see. If he pumps price up higher, if it seems inflated like it's going to go to the moon, bet your bottom dollar it's not going to the moon, and that he is selling to all the suckers that feel like they're missing the trend. So he pumps it higher, higher, euros higher, The dealer's offloading his contracts, man. And he's taking a hard short position against those traders. Bam, over. The LOY and HOI are major trap moves. Do not trade those as breakouts. Okay, new term, LOY, low of the year, HOI, high of the year. If you were at a high of the year or low of the year, do not trade those as breakouts. Okay? You will get trapped. You know, I know price can break above those levels and go for a while. Then you look for a W formation above the high of the year. You look for a W formation to get in, because even though they break these levels, they still make the same intraday pattern and they make the same weekly cycle. Go back and look. When euro broke the high and pound dollar was over $2, they made the same moves to get there. Every day, SSDD, SSDD, SSDD. Okay? Break the high, come back, make a W, rise higher, go into consolidation. Hit the low, W formation, hit M formation, back into consolidation. Over and over and over. Javon, UJ is a major. Okay. All right. Market makers will extend the high or low in 3 moves. 3 plays a huge, huge, huge role in all their behaviors. Okay? Why? Because people are stubborn. Three swipes at the stop loss levels, the 3 days of rise. These are the things that people have to see to get committed. If they get committed in 2 days or 2.5 days, the dealer's happy with that. He reverses. 3rd time's a charm. 3 strikes, you're out. It's built into our society and our psyche growing up, right? So it's no different in trading. They know this, and they know that it takes 3 moves to accumulate a certain volume, a certain level. Okay? Tom, it's not an important concept, brother. You just need to see the mechanics of what he's doing. Don't drive yourself crazy. The trend move is slow and steady. All right? Tom asked, I should have addressed it. He asked that he's having trouble understanding the concept of how these guys are making money, the mechanics of it. And it's not important. Understand that they are, and that if you trade those structures, the outside structure high, outside structure low, MW, half a Batman, pins to the mayonnaise, those are the things you're looking for, because those are, remember, the dealer's working it by the numbers. So understand that those things are the footprints or the clues to his behavior that we can identify on the chart, and that's what we're looking for. All right? Market makers, I was saying the trend move is slow and steady, important. If you've ever been in this, I want you to think about the moves. The fast move was conceived as momentum, right, in your old life. Understand that the fast move is false and that it's done on less volume. The slow and steady rise or the slow and steady fall with small pullbacks in between is done with all the dealer's money, and that is the true trending move. Okay, the dealer's all in, it's slow and steady and seems relentless. All right, I missed the cord of wood pattern. You're right, I did, and I need to make a slide for that. A cord of wood is when the dealer comes out high or low, and since I have room on the chart on the bottom, I'm going to trick you all and do a downside pattern. And he makes an outside structure and just lays candles like a cord of wood to the downside, like this. We call it COW. And this would be a cow on the lot, right? I know, what the heck is that? It's a cow, cord of wood to the low of the day, a cow on the lot. And we have a cow on the hod too. He'll go up and he'll just lay there. And it looks like when you look at the candles, it might be 4 to 6 candles sideways, a cord of wood. Just looks like a sideways thing. That came from my Minnesota contingent, because I guess they chop wood up there. It's like freezing in the middle of June over there. It's like I was there in like July 4th, and I think it was like 20 below. And I was like, and they go, oh, what a beautiful warm 4th of July we're having. And I was like, okay, this is crazy. Okay. All right, we covered all those patterns. All right, market makers need to book profits also, so the trend move will contain 20 to 25 pip pullbacks. That is where the dealer makes the high, then he'll hit the stops, drop, hit the stops, drop, reverse, right? These little moves in here are 20 to 25 pip pullbacks. And if sometimes they'll do it right off the level. And if you got in here, this will make you chicken out of a trade. It'll scare you. Not too far off, Susan, on Minnesota weather. Maybe a little exaggeration. It is cold up there, though. And I love you guys up there. All right. What the dealer shows you on the chart is to validate the technicals to line his own pockets. You got to change your mentality and start thinking like that. My wish for you is that when he grabs at your pocket, he comes up with some lint. You now know better. Okay? Don't make those mistakes anymore. They're over with. All right, we're going to look at the rules for a safety trade and then probably take a break. We'll see if I can't get my throat doing a little better. All right, safety rules. Here they are. Okay. Here's the rules right here, and I'm going to go over it and walk you guys through. Can everyone see this chart? Let me try to blow it up before you ask. I'm on to you guys. All right, got to get rid of the pen. Grab the view. And zoom in. No, that messes it up. Zoom out. Full screen. Is that a little better? All right, I can't blow it up any bigger. Here's what you got. You got typical run. What's the trend? Retail trader trend. Up. The dealer's trading above the 4-hour, above the 1-hour, above the intraday balance line, 50 EMA, and above the signal lines. That is a technical long. The dealer goes to the high and hits the high of the week or the peak formation, and he does it in a beautiful fashion. He hits pins to the top side. He pulls down, goes back up, and hits another set of pins to the top side. I don't have a name for that trade, but I don't know. Would that be a double M? See it? MM. Mr. Morrow. Okay. Anyway, you can tell I've been at this 4 days. I'm losing it. All right, look. The dealer corrects into level 1 consolidation. He widens the swing, and then he breaks high above the Asian numbers. A true safety trade, not a quasi-safety trade, a true safety trade will be a V top or an A top or an M top above the Asian range but below yesterday's peak formation. The dealer needs to be below yesterday's peak by 20 to 70 pips. A visible stop hunt is in the form of a M or VW for the downside. I'll show you downside example too. Okay? Understand what you're looking at. Let's talk about these numbers first, okay? 20 to 70. He has to be off the blue tracer from here to here, 20 to 70. Why? Because if he goes back and repeats the level, that's a multi-session M. A safety trade is a trade where the dealer does not come back in the confines of the blocked out portion of the chart, right? Because understand what's going on here. This is blocked. Right? You know I can't draw. You know what I meant. Be square, right? Okay, so this area is blocked. It's clean. The dealer is not going back to that level. If it happens where, like this could have been mistaken for a safety trade, and you would have got jammed. If that happens to you, you need to come back at these guys and hit them again. And I'll talk about that coming up when we do stop losses after the break. Okay, look. There has to be some distance between here and here, and the reason that it's such a big variance is this, is that sometimes when the peak formation is formed, the dealer gets the hell out of there very aggressively. And if this is 100 pip, or let's say 150 pip move, right? And the dealer ends the day off of here and comes back to mid-range, that would be about 75 pips or so, or 70 pips. Let's just call it 70 to make it easy. run. Sometimes you get first leg that has 3 levels in it. You'll get an aggressive move that'll look like this. And then the dealer will make the W formation and end the day in consolidation. Well, using simple math, high minus low gives you 150 pips divided by 2 is 75 pips. Take this number, take 75 pips mid-range, and know where the consolidation and the trend will terminate for the day. If the trend terminates in here and the peak formation is here, you have a monster distance of about 75 pips off of the low, right? Now, when the dealer makes his stop hunt to the top side, you can add another 25 to 50 to that number. Let's just say 25. The dealer will be 50 pips off of yesterday's peak formation. That's how he does it by the numbers. Okay? Don, how do I know? Because I trust the method and I understand what I'm looking at. So how do I know it's not a reset? I don't know, but if you wait for the one where the dealer gives you visible evidence that it's not a reset, it's right here. Pins to the top side. A collapse back inside the mustard is a good entry. He has not violated peak formation. I know the trend is exhausted because I'm at the high of the week. I know that the trend has been rising for several days. How do you know? By just looking at that section. Because it takes 2 to 3 days to get these averages to fan out of price action going up. Simple. Go check it out. See if I'm crazy. When the moving averages cross over, you have to have an aggressive move to the top side, which is what? Trend acceleration. And it takes a couple of days for the indicators to get overextended to the overbought condition. It takes several days for the indicators to get to the oversold condition, 2 to 3 days to be exact. And we'll cover that in TDI and RSI tonight. But understand that when everything is exhausted, when everything is overrun or overextended, it's a ploy by the dealer to get the last batch of people to join in the trend going the wrong way. Okay, so what you're looking for is a peak formation high of the week to be set in, and the dealer to come near that level and fail to break it and issue some pins in an A top or a V bottom, or a better safety trade would be a beautiful M formation right below the peak. If he did this, it's better. Okay? So what I'm recommending is that when you take the A tops, you wait for a little more visual confirmation. A collapse inside the mustard or even inside the ketchup. Okay? You have a little pain sideways, but the trade was in profit most of the time. It went above. Remember, how do you analyze the area? The dealer closes above, but comes right back below. Within 30 minutes, the trade is still valid. Okay? Then you have some other evidence that the trade's going to work out, and it ran for EOD, and I missed a few pips, left them on the table. I was mad at myself. You have no closes inside the mustard, and this is the first sign of any slowdown. We're getting close to the 5 o'clock tracer. I figured it was over. And if I would have waited for it to bottom out and come back, I would have made about the same. All right, do you see that? Those are the rules for safe trade. Safe trades are the easiest trades to pick off because when this is put in, I have late U.S. session to mid-London, 18 hours to see it coming. Okay? 24 hours to see it coming. If it happens over here, then I have 24 hours to see it coming. It started mid-London, terminated the double top or M formation, peak formation high, formulated over 2 sessions. That would be a multi-session M, right? This is a look at this is a big M followed by 2 sub-M's in there. It's pretty great stuff. Okay, look, small M, mid-London, comes back, hits the stops, and then formulates railroad tracks and another setup. Now I see this and I'm like, holy crap, that's beautiful. Dealer goes into consolidation. I'm eating my cheesecake at the Cheesecake Factory. I'm having the jambalaya today. They bought me out a nice bread basket. I get home, look at my charts. I know, man, look at this. I'm expecting this tonight. I'm expecting this or this, and if he gives it to me, I got him. Okay? Why didn't I scratch out? Confidence in what I'm doing and understanding the method. the trade was in profit and pulled back and stayed below the level, right? The trade stayed below this level. It never was a threat. Stop loss is right here outside his grasp. Okay? Good stuff. Okay, question asked, why didn't I go short here? The core to wood. There's a core to wood, by the way. Core to wood on the low is a bottoming out pattern. And I want to swing. Wait for the widening of the swing. That's why I try to tell you that the best moves are a good, clean violation of the Asian numbers, right? To where we redraw the box at the end of the session, right? 24 pips, this is more like 12, 15. Then he makes a clear run up. This is a very mild stop hunt to the downside if it is in fact a stop hunt. My bias is to the downside, so I ignore these trades looking for a topside stop hunt, looking for a topside A pattern. Okay? I'm looking for topside activity above the Asian numbers that would give me a nice entry. That's it. That's what I'm looking for. And if I don't find that, I don't trade it. That's what I'm trying to teach you guys. You got 5 bullets. You're allowed to shoot 1 time a day. 5 trades a week, 3 trades a week. That's what you're looking for. But the difference between an amateur and a professional is you're trading away from peak. You're looking for opportunities when the dealer comes near the peak formation but fails to violate it or break it. It is safe to trade short on an A top. And listen, if this would have came back up here, I would have had some heat, and I would have had to decide how he handles the high. If he closes above and doesn't, if he would have railroad tracked here, still good. If he closed above and stayed above this level, then I know his intent is to rise. Okay? If the dealer breaks a level, if the dealer broke this level and stayed above, not a quick close and a quick pullback, a quick close and a quick pullback, 30-minute structure is an attempt at the stops and then a pullback down, not an attempt, a move for the stops and back down. If I realize that, I'm still good. If the dealer closes above and stays above, you scratch out and take your loss and lick your wounds and get on with the day. The dealer closes above and stays above, his intent is to rise or fall to the next level. If the dealer closes below and stays below, okay, he went below and came back above. If he goes above and stays above, goes below and stays below, his intent is to correct. Okay? All right, man. You got to learn to be selective. I don't know how else to say it, how many other ways to talk about it. You got to wait for your set, man. It always reminds me of that movie Point Break. A lot of you guys know it. It's a lot of my Australian brothers know it too because he runs to Australia, doesn't he? For the 7-year storm or the 20-year storm or something, or 50-year storm. Right? And what happens? He's standing on the beach with a surfboard. I got to pull that clip for you guys. And the agent comes up to him, which was Keanu Reeves, and he says, "What are you doing, man?" And he said, "I'm waiting for my set." He's standing on the beach with a surfboard staring at the 50-year, waiting for the perfect wave to get out there. So what I'm telling you is you got to stare at the charts and wait for your set. When's your set coming? I don't know. But it needs to be something that you see that the dealer does. There's a core to wood, by the way, too. Got peak formation. The dealer, my bias coming out of level 1 is this and this alone. Okay? I expect a stop hunt below the Asian numbers, some type of V bottom or W bottom that will give me an easy chance at victory. Okay? It's safe to trade long when the dealer makes the peak formation and stays off of the level 20 to 70 pips and makes us stop hunt. If you retool the box, remember you're smarter than a blue box. If you take this part of the box right here, that's where the box probably should have terminated because we're past 1 o'clock in the morning. You should have re-bracketed the box to here and you're saying, okay, there's the consolidation, there's the aggressive move. And if you notice, he violates in a nice 3 push, taps it at the bottom, pulls back above. There's your cord of wood, a sideways laying on the low of the day with the stop hunt below or above, right? The dealer lays sideways at the low. He hits the stops. Picture in your mind this, because that's what he did.